We have a daily chart here on Google, and we also own a position in Google. And the thing about it is identifying and mastering when a bigger breakout will occur. One of the things that we take great pride in is that it's a daily chart, and each line is 3.66 for Monday, tomorrow. Today's date is 11/6 of 2011. 11/7/2011 is when that market's going to open up. And the thing about it is, I'm just showing you a daily chart here. And what is a qualifier to hold an option 2 months out is that you have to have a half delta movement. But if you get 1 delta, 2 delta, 3 deltas, this qualifies 100% of the time on the entry management. This is what we call an SMF qualifier on an option. And when Google was up here at the high, the European contagion had marked it down here to this half delta line in our system, and from it actually undercut it, really got it down over here. And the date on this one was the date here. Let's see what date that was. That was on 10/25, and that low then on 10/25 was 582.25 right here on this bar. Actually, I'm sorry, it was the low was 572.86. It didn't change. Here in the info panel, 572.86. Excuse me for the error. That was on 10/26 of 2011. That was where we hit that low. Then we popped up to the intraday highs up here at 602.70. Then what ended up happening is we consolidated a couple of days up here at the high. This is the very high, the move. And we finally got up there, and we closed slightly above the $600 handle, and then European headline volatility risk got into the market, and they marked it down. They marked it right here to our long-term daily delta line support in the SMF system. Then from there we popped up. But what qualified for the trade that will end up going in the SMF overnight options position management document, risk management document, is we had to have a basis for buying it. And any time that you can run a half a delta times 3, that's a delta and a half in our system, and it did that. So you can take a look at that daily breakout. You can see that you're holding the price level of the previous. So that this was done on the this last daily bar was 11.4, and that was Friday, and this was the 11.3. That's where they had marked this down with Europe, and they marked it back up because it has a weekly buy signal, and the daily chart is robust. We had to have a qualifying reason to own it. On the call side, you will fill out your call sheet that you have, MMTs, in your emails. You will take that sheet, you will apply, why do I own the call side for the longer term out, but what am I going to do is I have to look at the put side of the market over here. So I have to have all the reasons why I'm going to go higher, but if things fail, then I'm going to have to know, do I need to get on the short side of the trade? And we would be looking at what the put side, we already own it. It gave us a qualifier with 3 half deltas up at 3.66 delta. That's a big daily buy bar. That's the qualifier to own it. Now that we do own it, it met the qualifier. In the risk trade management, we have to look at the other side of the trade, and we will. This is a December call. It's a 650 call up and out of the money, and it's fairly deflated in its value. The longer term value back over here, we're at about $30 a contract, and we were. And I can clearly show you that within this pricing structure of what the actual risk was. These were on 7/26, they were at one point in time $30 on the call side. However, we got down here to some lows of $1.80, but then we popped up here to the high side on 10/14/2011. You can clearly see that we have taken a December up and out of the money 650 call, because the actual dollar cost risk from here of 1140 on the high on 10/14 of 2011 was 1140 on the highs, and we've been buying over in here, and our cost is somewhere in this area of around $4 and some change across the board. However, in order to even entertain the thought of owning that call contract here in this video is that there has to be accountable trade risk management of where these calls would go, and it would all be based on what is Google going to do on its daily chart. What was the qualifier to be in this December 650 call was the 3/2 delta breakout from down here. This was about, if you want to take the full daily, the daily low, which was on 11.3, what put us in it is we went from 583.72 to the high of 597.5. The open was 587, so they dropped the bid down. They marked it down where we bought the call options. That was at 583.72, and the close was 597.5. Closed on the high of the day. And the actual volume, well, it was 2,669,700,000, 2669,700. The total bottom up movement in our 3/2 delta qualifier equaled $13.70 markup in the actual trend my MMTs. And the thing about it is that the forward-looking tops are going to be broke. If they break the high, we got to take a look at where some of those next highs are in Google. We can simply take this part of the highs over here. So if we break out, we would be looking at this portion of the price movement above the market. And we would be looking at where mathematically 610 over in here we have highs, back then we had highs of around 603 right here. We had highs over here of 609.67. That's going to be an upper end of the resistance area. If we can break above this, this is back in that time. This is going to be the current upside price levels that we're going to be looking at, where Google was a short over in this time frame. That's okay. We're looking at where we're going to go from the current level of the closing price, and that's 596.14. But how are we going to get up to these delta tops over here in this time frame? And this is going to be the major time frame. It's going to be these areas right here. Here's going to be the 607. That's going to be a challenge. Some of these lows right over here, this low right here was 599.18 at the time. But the high here on that date on 8/1 was 615. So it was a top-down trade. This is going to be the wall of resistance, my MMTs. So when we're looking at filling out our purchase option agreement, we're looking at where the equity can go to the upside. Then we have an exit for the call side. But then on the other hand, let's say it goes the other way and we have to look at the put side. Let's say if we start to go down, we would have to know how to get put transactions, and we would show people how to get the put to protect the downside of the position, because that's what we have here. And basically, as we understand what upper side movements may or may not be, what is the catalyst of the qualifier is a 3.5 delta movement. And a delta is quite large. As we price them out, we get the right prices, and we know what the prices are going to be for Monday. It's going to be 3.66 per half line. And this platform, doesn't matter how far back in time you go, this is that major top that we're in right now. There's that gap. There's the low of that gap relative to where the gap occurred right here. That's the low. That's the high reversal. That's the markup back into this congested area. However, once we break through it, we look at where the next upside of the market is going to be, and it's going to get right back here. It's going to get up in this area. So these are going to be the upper side diamond resistance areas. And in the current movement, we need to see the daily diamonds closing like this, up toward the high of the diamond structure, just like it was there. And we need to see that over here happening moving forward, that this diamond structure right here, that this diamond on a daily level continues to get above these higher diamonds over here, and that's going to be above that 600. We'll see what happens Monday. This is a special preview on how MMTs own, once again, they own these calls here. Not only that, there will be put options that have to be looked at on Google. There are put options that can be bought to protect the downside. We have them all. We're going to expire the 11.4 because 11.4 is over with. And these are 11.11 and the monthly 11.19s. There's various different put options that are available. There's a 6.10 put. We're going to be watching that for 11.19 because if that goes down in value, then the call option will go up in value. There is another one on 12.17 called a 620 call. And the 620 call is one that we were on the high of 22.80. We were down here at 790s on the low, and we started to buy some over here. Not a lot, but it's a further out trade. There is a lot of upside when Google breaks out. Google has to really break out to qualify now that the new daily bar that starts, we need to see another big breakout bar. And that's going to be another bar like this one here. MMT, this bar right here. It's going to have to be this kind of bar where you get 1 delta, 2 deltas, 3 deltas, and you're up at the higher end of the diamond. That's the daily qualifying bar that gave us the option to buy Google because of the daily price breakout.